Up next on Smart San Diego, we're discussing the ethics of mortgage cross-qualifications. Please welcome Realtor Lauren Taylor.
And she's back. Lauren Taylor is here. What's up, Lauren? How you doing?
I'm good. How are you?
All right, great to have you. This is something that I don't think a lot of people understand, or when we say it, they're not going to know what the definition is. But if you've bought a home, there's a pretty good chance you've gone through this process, and we're sort of questioning the ethical nature of what is called a cross-qualification.
Yes.
Which is, if you're, well, let me have you describe, what is a cross-qualification?
A cross-qualification is when you bring an offer on a home and the listing side, the listing agent, has asked your lender or yourself, the buyer, to verify your ability to purchase with a lender that they trust and or regularly work with. So sometimes this is just a lender-to-lender conversation that happens, and sometimes they actually do ask you to release documents to their preferred lender so they can legitimize if you're going to be able to move forward on the purchase of the home.
Sounds reasonable.
I mean, on the outside, it absolutely sounds reasonable, right? As a listing agent, one of the things that I can do to protect my clients is to ask for cross-qualification, because the number one reasons why escrows fall out is due to inability to obtain financing. So if I want to protect my seller, it seems like a reasonable thing to ask.
But you've recently stopped doing this.
I've recently stopped doing this.
And tell me the reason why.
So in the last couple months, there has been a number of actions that have come to light across the country where the question of ethics and cross-qualification is coming into question. If you're asking a buyer to distribute or hand over personal financial information to a mortgage broker who they have no intention of doing business with, is that a violation of consumer rights? And this is becoming a very highly debated topic in our community, especially because cross-qualifications in San Diego are so widespread.
They're widespread, and because it's a requirement.
Yes.
So it's not an option. In other words, you're saying, as a listing agent, you're saying, well, you have to give all of your documents, your personal financial documents, to someone of my choosing to review them in order for me to even consider your offer.
Yes.
So there's no choice. I mean, the only choice is I give you the documents or I have no offer.
Yep. It's kind of the same as sign the waiver and ride the roller coaster, or you don't get to ride the roller coaster, right? And the question is when signing that waiver violates a buyer's rights to privacy in their financial life, is that something in a practice that it should continue whether it protects the seller or not.
Do you think it's laziness at all? Because it seems to me like most agents have a lender that they trust, and they say, okay, well, if you've talked to my guy and he says you're good, then I'm cool with your offer. But do you think it would be just as easy, or maybe just take a little bit more work for the agents to call the lender they are pre-qualified with and vet that situation?
I think this is a great question. So one of the biggest myths that run outside of our industry is that realtors and lenders largely do the same thing. And it's interesting that I'm here weighing in on it because I'm a realtor. I'm not a lender. So, although we may look like we play doubles tennis in terms of working well together in a transaction, their job and my job is completely different. And the expertise to execute one or the other is completely different. So I actually do like to hear from my lenders that this person is strong, because that's a different language to me. Although I may have a baseline understanding of it, and it's something that I help educate my clients on a broader scope, when you get into the nitty-gritty ratios and the nitty-gritty numbers and the concerning past history, that's something that a professional needs to weigh in on who's licensed to do so, and I'm not licensed to do so.
Okay. And so the fear is that if you just let any buyer walk in with a pre-approval letter from some lender you've never heard of, that you'll take their offer because maybe it has the best terms, but then they won't be able to perform. They won't be able to get the loan. You'll fall out of escrow. You'll have to relist the home, and that could potentially damage the listing.
Oh, absolutely. I mean, I recently just had one up in Temecula here fall out after the buyer had us for 5 days and just canceled kind of on a whim, unfortunately. And the sellers, we had to pick back up momentum. I had to reschedule 21 showings when we accepted the offer with this buyer to move forward. It definitely hurts the listing. It hurts the seller predominantly when a buyer doesn't follow through, even if it's well within their rights.
And so as of right now, we don't know that there's anything that says that this is illegal to do, although it's a gray area probably, as the CFPB is looking into it, right?
Right.
So it's probably a gray area, but there's nothing that definitively says cross-qualifications are illegal. The question is really, is it ethical? And I think that also is still kind of a little bit dancing in the gray area because it can understand both sides. It can understand both sides very clearly. However, my problem with it is like, it's a gateway drug, right? It's like, this is what leads us to steering. Like, this is a perfect step towards steering. And I have a very terrible example. I mean, it's a good example for the situation, but it's a terrible situation where a lender friend of mine is a very good lender and a very good man. His friends were wanted to buy this house. And they had to be cross-qualified with a certain lending company. When it came down to it, they were told that if they didn't use that preferred lender, they would not get the house.
It happened to me.
They would not get the house. And that preferred lender's rate was 0.25% higher than what they were quoted with my buddy. And so they, not only did it cost them money, not only were they violated personally in that situation, but it actually cost them money. They said, we really want the house. And he said, you know what? That's what you need to do to get it. So go ahead and go that way. I want you to have the house. I know you want the house.
Right.
That is what I have a problem with.
I completely agree. That happened to me and my husband, actually, before we got into real estate. Before I got into real estate, when we found our house that we wanted to purchase through a family friend, and it was off market at the time. An investment company here in San Diego owned it, and they said, if you use our agent and our preferred lender, this price stands. And I wasn't educated enough to question that. Is this normal? I don't know. This is my first house. I'm only going to buy 4 in my life. And honestly, after going through that transaction, that's what motivated me to get into real estate altogether, because I was like, whoa, this was not okay. We were convinced to not use our VA home loan, which had a significantly lower rate, to use a conventional loan, which had a significantly higher rate. It was not a good experience. And I think the one that you bring up is extremely interesting when we go into the new build developments here in San Diego. So when you look at a brand new home, you often, to get on their waiting list, you have to get pre-qualified with their lender. Well, their lender is often owned by the developer. So now you're asking a buyer to disclose their personal financial information to essentially the seller. Even though it's 2 separate entities, it's all one body that, under the same umbrella. So it's just I'm excited to see it become a more debated topic, because I think that it's important for our consumers to know their rights, and also to talk with their lenders about what their options are other than cross-qualification. So for instance, with all of our buyers, we send full DU approval, because we're trying to show them, without having to cross-qualify, the strength of our clients.
Right. So maybe a more robust, instead of just a pre-qualification letter, a more robust package, pre-qualification package could help.
We're looking at what the lowest housing availability in terms of inventory since like 1999, right? There was just an article that came out about that. So I think that if you're going up competing against multiple buyers in most situations, it's completely, makes sense for someone to send a larger package than just a letter. I personally think that we're past the time where a letter is an acceptable way to prove that someone is a viable buyer.
Yeah, I agree. This isn't the old days of, flash in the pan mortgages. Hey, we pulled their credit, they're good to go. Yeah. It's more complicated now, for sure.
And not only that, but in a low inventory market, it's like you have competing buyers. If you want to compete, you have to show them, you want to show them something as good as cash, if possible. And right now it goes back to really educating our consumers, our buyers, about the industry norms that are changing and getting ahead of those times, being the one that benefits from it, not the one who's left behind.
And as you experienced, as a regular person out there going to buy a house, especially for the first time, it seems like everyone's the same. Like, oh, use this realtor, use this lender. Oh, okay, they're all the same.
Yeah.
What's who cares? You want me to use your people so that I can get the deal? Yeah. Inside track, I'm in.
Right.
People will think that way because they don't really know what's going on. But essentially, those people are working for the person that you're supposed to be negotiating with.
Yeah.
The whole thing with the builders is completely ridiculous. I'll just tell you that right now. There should be absolutely no way that a builder should be able to own a mortgage company or have any kind of way to generate revenue from mortgage. It just should not exist, because it is a conflict of interest, 100%. And it's the exact type of conflict of interest that should not exist in the financial marketplace.
Yes, I completely agree. So my concern is that when I see, these developers kind of knocking off prices in the purchase, like, oh, we'll give you a 3% discount, but then I see like an exact same increase in the mortgage rate. So they're making up their money, they're just shifting the numbers around. And that to me is a huge disservice to the consumer, largely because agents like myself who are used to reviewing these contracts and are used to explaining what is the norms and is not the norms are not always let into those conversations to advise our client that, this may not be normal and this may be something that you should consider further.
Yeah, it might be costing you more money when it looks like a good deal on the surface, and that's the big problem that I have with it. So fantastic topic, Lauren. Thank you so much for your time today. Really appreciate it.
Thanks for having me.
We make you smarter. That's what this show is all about. Stick around for more Smarter San Diego TV, where we guarantee to make you smarter than everyone else, commercial free.